Well, we've made it to the final week of October, and guess what? Austin's number one for buyers. We were just voted the number one buyers market in the country by Redfin. And what that means is we have a lot more sellers than buyers. Well, how many more sellers? 130% more. What that means, here's Austin, number one. Sellers, we have about 17,500 and we've only got about 7,500 buyers. So really, if you think about that, that means that if every buyer wrote an offer, every buyer bought a property, every buyer bought a unique property, we're still going to have roughly 10,000 sellers who don't get an offer. So it's rough times out there, hard to be a seller. But if you want to know why, it's math. It's supply and demand. We have a lot more supply than demand. Fort Lauderdale, West Palm Beach, Miami, Nashville, San Antonio, Dallas are all 2 to 1 or more sellers to buyers. So if you're wondering why it feels slow out there, that's why. There's just not enough buyers to look at and bid on every property that we have in the market. Here's where we sit right now. We've got about over 5 months of inventory. We're seeing obviously the supply come down, pretty natural fall trend, but still way elevated above normal times. As we mentioned, we're probably 4, 5, 6,000 homes above kind of even an average time. And demand is below our 10-year average, as you can see on the right-hand chart. Typically, now it's not as bad on the buy side. Yeah, there's not as many buyers, but it's not like it's 50% less. It's probably 10% less or so on the number of buyers in the market. So we're seeing that movement. Here's what that means. You can see appreciation peaked out in 2022, and we've been on a downslide since then. I'm going to move me here in the middle. So how do we compare kind of, the last 12 months versus the 12 months before that? So right now, the asking versus sale appreciation's down, but not as stiff as it was falling maybe the 12 months prior. But we're down about 1.5% off September last year. Asking versus sales price. So whatever your final list price is, forget where you started, wherever your final list price is, we're still seeing buyers scoring about 2.8% off that price. And then if you add that to the original, if I come down here, original versus asking price, that's about 4.3% right now. So you have to add those together. So let's say you start at 500,000, you do some price reductions of about 4.3%, then you get an offer and you settle about 2.8% off that. So we're looking at the market on average is probably averaging over 7% off the original list price. That does not mean that's how every house is going to go. It just means when you factor them all together, we're seeing that softening of about 7% off the original list prices and about 2.8% off the final list price. Days on market are higher, months of inventory higher, and that's just because of supply. It's going to take longer to sell a property. Why? There aren't enough buyers. There aren't enough buyers to buy them. Here's where we sit right now. This is active versus sold listings. If I go back to September, we closed about 2,600 single family home sales. This chart is just single family homes, not condos and everything. But if you can see, we're peaking down, but we're still sitting as of October, 13,800 homes, and we're selling about 2,600 of them. So again, just that blue bar can tell you we're only going to get, maybe 1 out of 5 sellers are going to get an offer in any given month. So it's very slow right now. We've recorded closed sales of about 1,500 in October. And again, that stat's behind because some agents, it might take up to a week before they go back in the MLS, market sold, put all the data in there. So typically we'll have a better idea maybe early November how many solds we had in October. All right, well, here's some prognostication kind of moving forward. So last week, Eldon Rood, he is a real estate statistician here in the Austin area, very well respected. He's talking here maybe a little more about new construction, but it was interesting to hear his notes. He says sales remain incentive driven. So again, think new builds. They're really incentivizing those buyers to make offers with flex cash, closing cost credits, buying down the interest rate, whatever they have to do to get buyers to make offers on those homes. Spec inventory is elevated. What's a spec? It means the buyer didn't go into the builder and custom design it. The builder just builds the house with what they think the market wants. Think of like D.R. Horton and Lennar, the big builders. They're just going to build popular floor plans, put them out on the market, and hope buyers walk into the model home and want to buy them. So that's spec inventory, but he's expecting that trend. This says 2025. He meant 2026, but they're expecting we're going to see less of that in 2026, less supply because they need the market to catch up and they want to protect their margins. If you flood the market with too much new builds, you're competing with yourself. Job growth in high-paying tech sectors is flattened, and we're feeling that. That means you're reducing kind of migration for jobs. You're reducing the move-up buyers because those people typically have higher salaries. But the apartment market is showing signs of bottoming, and I've talked about this in numerous videos in the past, but they're seeing the absorption rate, meaning how many leases are they getting, kind of exceeding the new supply hitting the market. That's a good sign. That means they will start to fill them up. And that's what we want to see there. That will help the rental market, which in turn supports the buy market in the future. And then land. So if you think about building, what really also elevated during COVID was land prices. Everything starts with land. When you're building a property, you got to buy land first and then build on top. So anyways, they're saying it's really setting a reset phase. Like the builders and the developers are really tired of paying elevated prices on land. They've got to get it cheaper so that they can control the costs of the construction and everything else that has gone up. So land's resetting. And then finally, he predicts maybe the next 6 to 18 months in Austin area is transitional. And so that means it's still going to be volatile. The headlines are still going to be rocky, but essentially we're starting to flatten out. You'll see more investment capital kind of slowly coming into the market to plan future projects. And eventually, that somewhere on the tail end of that 6 to 18 months is where you'll see the market potentially start to improve. Here's what Fannie Mae says. So what are they predicting for 2026? More homes will be sold nationally, slightly lower interest rates, slightly lower inflation. And so here's what that looks like from a mortgage rate perspective. So the blue line is the Mortgage Bankers Association. The green line is Fannie Mae. So the mortgage bankers aren't as optimistic. We're kind of, they're predicting this was 2025 through about right here. So right now I'll show the mortgage rates in a second, but they're predicting rates really are going to be just ever so slightly going down. Fannie Mae predicts they'll go down a little stronger, maybe through the end of next year. So they're predicting sixes if you're the bankers, maybe a little more optimistic if you're Fannie Mae. So where are we right now? We're sitting here at 6.19%. And again, that's not everybody's rate. That's just kind of the par rate for an average buyer. But generally, we're sitting at a good rate right now. And if you're, maybe you get a point buy down or you have good credit or you're putting more money down, you might already be high fives, maybe 5.9, somewhere like that. FHA, VA, you're already in the fives. So good news on rates. They really have been kind of slowly, quietly coming down. I know the Federal Reserve is going to make another announcement this week with their rate. But again, don't worry about the Fed. Watch the bond market. The bond market will tell you which direction the rates are going to go. Finally, Austin was just rated the #1 best college town in America. Check that out. So as a UT grad, hook 'em. I had a good time here. So not exactly what all it says. They're using key indicators from academic, social, and economic opportunities. Look, we're a big city. If you go to a lot of colleges, you're not always in a big city. You might be, Baylor, where I grew up, is in Waco. It's not as big of a town. College Station, not as big of a town. So, some of this is you're getting some benefits. Look where the college cities are. Austin, Ann Arbor might be the smallest on this list, but Orlando, Tampa, Raleigh, those are bigger cities with a lot of jobs. So good for Austin having UT there. Well, if you are a home seller right now, it's all going to come down to wowing the buyers. It's got to be the best price the buyer can find. They're looking at lots of properties. They're slower to make decisions. Why? Because they're kind of overwhelmed with supply. They got a lot of choice. And so the buyers want to keep looking at new stuff because there's new stuff to look at. So much harder to kind of pin down a buyer and ask yourself the question, what have I done for the buyer? Really ask that question because that's what the buyers are looking at. Hey, what have you done for me? Did you give me the best price in the market, or did you fix something up, or did you give me a benefit in some way? If you didn't do that, then don't expect the buyers to get excited about your property. If you are a buyer right now, I think you have a window. I cannot predict what's going to happen next spring, but you can see what happens every spring. Sales go up, listings go up. We're just going to have to see where that balances out next year. But if rates start the year at, low sixes, maybe even touch a 5, don't be surprised if we see more buyer activity next spring. And surprisingly, you might going to have a little more competition as a buyer next spring. We're going to have to see how that plays out. We still have a lot of supply to get through. But if you're a buyer right now, look, there's not many new buyers coming to market between now and January. So here's a great window to have a conversation with all these sellers that would love to talk with you. Anyways, hope this video was helpful. You can make sure to watch our YouTube channel each and every week. Click that subscribe button. Would love to have you follow us at Ryan Kelly Group on YouTube. And of course, if you know somebody looking to buy, sell, invest, or finance here in Austin, now's a great time to give us a ring. Anyways, hope you guys are getting excited for Halloween this week. I know my boys are, and we'll talk to you next Monday. Thanks.